Hi guys, it's Annika here with TipRanks, and today we're going to look at two EV stocks that are set to soar in price that analysts deem a buy. Now let's talk about electric cars. It's an opportune time as the auto industry is moving towards electrification. Now this technology was always there, but recently a combination of factors have pushed it back into the limelight. And these include improvements in battery technology, advancements in plastics, carbon fiber, metallurgy, which now make possible the production of lighter weight, longer range electric vehicles. And this is also being fueled by the political climate shifting towards supporting electric vehicles rather than the gasoline-powered combustion fuel engines. And as a result, the global EV market is set to climb to a market cap of around $917 billion by 2028. This actually represents a 20% compounded annual growth rate. And naturally, this would intrigue investors everywhere. Now, in this video, we're going to look at two Chinese EV stocks because China remains the largest automotive market, both for conventional cars and electric vehicles. The first EV stock is Li Auto, and its ticker is LI. The company was founded in 2015, and it produces Li One, which is a 6-seater SUV that began serial production in 2019 and is now China's best-selling electric vehicle. Li was able to deliver over 32,000 Li One units last year despite the corona crisis, and it saw both production and deliveries increase throughout the year. Nearly half of all deliveries, over 14,000, were made in the fourth quarter. Li has seen revenue increase from Q1 to Q2, and it finished Q2 with a vehicle sales of around $759.4 million in the second quarter. Despite the rising sales figure between Q1 and Q2, the company's stock price fell, bottoming out in mid-May at $17. It has nearly doubled since then, gaining 90%, and Li will report its Q3 results on November 12th. The current price for Li Auto is $31, and the analyst rating consensus is that it is a strong buy. And the analyst price target on Li is $39.88, which is a 28.65% upside based on 6 Wall Street analyst ratings, offering 12-month price targets. Going forward, Li has plans to increase its lineup with new modules scheduled for release in 2022. In the meantime, the company continues to post solid delivery figures for Li One, with 8,589 units delivered in July this year, 9,433 more delivered in August, and another 7,094 delivered in September. Covering Li Auto for Bernstein, Eunice Lee initiates her coverage on the stock as an outperform buy rating, and she gives it a $43 price target. This is a 38.71% upside. Eunice Lee wrote that, "We have a positive view on Li Auto's roadmap to launching electric vehicles, and we initiate coverage on Li Auto with an outperform rating. As outlined earlier, China currently lacks charging infrastructure, and we expect the issue to endure for some time. Hence, we think Li Auto's choice for the EREV technology will remain competitive for a very long time, especially in lower-tier cities and rural areas. Li Auto's EREV is a solution for this transitory period as the country builds out charging infrastructure and moves towards BEV adoption. Li Auto is also simultaneously developing BEV platform and expanding its sales network to drive growth." The second EV stock is XPENG Inc., and its ticker is XPEV. XPENG is another automaker that focuses on the mid-range price bracket and is one of Li's competitors. The company has built its success on two EV models, the P7 sedan and the G3 SUV. As you can see, this is the G3 super long-range smart SUV, and this is the P7 intelligent electric sedan with internet DNA. Both are battery-powered all-electric with moderate pricing and modern styling augmented by long range. The P7 reaches 700 kilometers per charge, and the G3 can drive 520 kilometers between charges. The G3 also has only a half-hour charging time. These two models were joined in September by the P5 family sedan, which XPeng markets as the world's first LiDAR-equipped smart car. Deliveries of the P5 began in October this year. Initial numbers should be available by the end of the year. The company's latest delivery numbers for the P7 and G3 models climbed above 10,000 unit mark in September and reached 23,666 for Q3, which is a 199% year-over-year increase. Year-to-date, XPEV has actually delivered 56,404 vehicles for a 301% year-over-year gain. The current price for XPEV is $46.39, and the analyst rating consensus is that it is a strong buy, and the analyst price target for XPEV is $55, which is an 18.56% upside based on 4 Wall Street analyst ratings offering 12-month price targets. With these increases in the numbers of delivery vehicles, it's no surprise that XPEV has seen revenues increase sequentially in the last 3 quarters. The most recent quarter reported, which was Q2 of 2021, showed revenues of $555 million, a company record and up more than 500% year-over-year. The Q3 numbers are expected on November 18th. Bernstein analyst Eunice Lee deemed it to be a buy with a $56 price target, which is a 20.72% upside. In her coverage report, Lee wrote that XPEV targets mid to high price segments, the lower end of which is below comparable products on the market, and offers a large addressable market that has historically served the domestic auto brands better. XPEV has made most progress on ADAS development in China, which we think will help build its brand equity in the domestic market. There is also significant room for margin improvement as its delivery volumes continue to pick up. So guys, those are the 2 EV stocks that analysts deem a buy. Leave your thoughts in the comments below, and if you made it this far, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. Remember, none of this is financial advice. I'll see you guys in the next video. Bye!